Let's give the stream a minute to sync up here so that I can see. All right. Okay. There you all are. Welcome, beautiful people. Okay. Good afternoon, good evening, or good morning, depending on where you're joining us from, and welcome to another episode of the AI Circle brought to you by the iFlip YouTube channel. I am your host, Aaron Yoon, and joining me today is we have a couple of special guests, and let's bring them up on the screen right now. Joining me today is usually just Kelly, but we also have a special guest, our CEO, Randy Tate. Welcome, Randy.
Thanks, Aaron. Pretty excited to be here. Big day in Flip World.
Very big day. That's why we had you come on. And of course, our usual Chief Investment Officer, Kelly Korshak. Say hi, Kelly.
Hello, everyone.
All right. Now, before we have a very special announcement. Obviously, you can tell by Randy's presence being here. We only bring Randy on when it's a special day. But before we can get into any of that stuff, we have to get the disclosures out of the way. So please bear with me one moment as I go through the disclaimer. iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip portfolios that you select are suitable for your investment profile before trading in a live brokerage account. Now, I'm very excited to be done with that. I'm going to actually pass this back on over to you, Randy. I'm not going to spoil anything. I'm just going to let you take over from here and give us a little bit of it's not even a sneak peek. You have a very special announcement that went live today. Please enlighten us.
Yes, we are very happy to announce that we went live today in a crowdfunding round with Start Engine. What does that mean? That means, in true to Flip fashion, the way we do everything, we empower everyone to preserve, protect, and grow wealth. We've had a lot of requests over the last couple of years for the average person to be able to not just use the Flip software as an investing tool, but to actually invest in the company itself. While we've raised plenty of capital, that's in a Reg D world where you need to be accredited, you got to read a PPM. There's a lot to it. So what we've done is we've partnered with Start Engine. We've become one of their offerings, and we've built it into a Reg CF. So that means anybody over the age of 18, not living in Iran or North Korea or Canada, unfortunately, can invest in little bits and pieces inside for the company. What does that mean? That means for as little as $500, you can actually own a piece of iFlip. Now, we are under a mad race right now. The way Start Engine works, they have hundreds of thousands of investors. Well, another reason why we decided to do this is these investors are also perfectly tailored to be our customers. So what better way to market than go out and show this to all those folks? Here's the catch. Start Engine needs us to get 100 investors on our own accord before we go out and start promoting it, or before they go out and start promoting it to their network of hundreds of thousands. The rule is this: they want us to get 100 investors on our own in the first, I think it's 24 or 48 hours. Right now, we're in the 60s. We just started a few hours ago, and we've already got 60 investors. Now we're trying to finish that up. So everybody on this call, you're going to get the opportunity. So somebody in the general chat would be so kind as to put the link, the Start Engine link in there. I tried to put it in there. There it is.
It's in there.
So that link right there, don't run away. We got the AI circle. You don't need to leave right now. It's not that urgent. What we want you guys to be able to do is go through that. There's a cool video on there that we made. There's a bunch of information about the company. You can literally look under the hood at who iFlip is and what iFlip does, even at the under the hood level. So I wanted to come on tonight and share that with all of you. I didn't want to steal Kelly's thunder and step on markets and what's going on there. They got an awesome trivia question tonight too, but I want all of you to have the opportunity. So either copy that link, paste it, click on it, go away on your other browser while this is still running, and make sure you save it so that after we're done with this, we would greatly appreciate all of you. Now, you can invest as much as you want, up to $1 million. However, you can invest as little as 500. And so that's my big announcement. Super excited, Aaron, Kelly, Lee. I see people that are on here. Really happy to get this thing going, and looking forward to seeing all of you down the road. Aaron, back to you.
Thanks, Randy. Now, I did put okay, it's right above my head, right here. I did put a QR code for those of you on desktop that you can just scan that. If you're on your phone, well, you need your phone to scan the thing, so you bet that probably won't make as much sense. But those of you watching on desktop, on your computer monitors, feel free to whip out your phone right now and scan that QR code. It is on the top left of the screen, I believe. It's above my head.
I don't think you can do it, Aaron. The word live is covering it. So maybe you can lower it a little bit, if possible. You got the right idea, but it's being blocked for us to scan.
Okay.
Someone just did. And it looks like we just got to 70. So we need 30.
Somebody actually did scan it. So I mean, maybe it's just us. Maybe it's our view that's
I scanned it. It worked.
Okay, so I'm going to leave that up there for the duration of this show. Let's see now. Do we get any questions? Now, before we let Randy go here, do we have any questions about the Start Engine campaign? There are a couple while you guys submit your questions into the chat, there are a couple of housekeeping items that we've already seen from the dozens and dozens of investors that have been involved and have taken advantage of this offering. When you have to sign up for Start Engine, because Start Engine is its own platform. Now, a lot of people have thought that Start Engine was just like an extension of iFlip or something like that. And that's not the case. It's a separate entity. Like, it's just a crowdfunding platform. So it's not your iFlip credentials. It is not your iFlip username and password. You have to create a separate account with Start Engine. Now, I personally like to use the convenience of Apple sign-in, Facebook sign-in, or Google sign-in. So you would have to create an account if you don't already have one. Just clicking login isn't intuitive. So you would have to create an account using either your Gmail, your Facebook email, or your Apple email, and then you're ready to take advantage of the offer. Okay, so that was just a little bit of housekeeping there. Now, Randy, we did get a question, not kind of related to crowdfunding, but kind of related to just in general owning iFlip. And I think this is a valid question. McKay Judd asks, what is the overall plan to IPO, to go public?
Hey, McKay. How are you, man? I thought I might have saw you last week in Dallas when we were there. But we didn't. So the overall plan is not to IPO. Hope that's coming through. It seems a little sticky. The intention is over the next 18 to 36 months to get ourselves in a position to potentially be either acquired or to just keep the company running. An IPO is an outside shot. It is not in the center of our radar and what we're wanting to accomplish. Neither Kelly nor I are young spring chickens with, over ambitious mounds of energy. However, the company could stay as is. We could sell to somebody, or we could just remain a profitable solo entity, a C corporation. That's what we're doing. And so we do know, and we do expect our investors sometime in 18 to 36 months to be able to exit. That's the plan. The exit strategy is to be acquired, number one, or become profitable enough to buy the equity back from the early investors at a profit. Third option would be an IPO.
We just had someone else scan the QR code. Thank you, whoever that was. Hopefully, you like what you see when you get there. Callie, I'd like your input in this question as well, because you've been around these types of offerings and everything like that. And if I'm not mistaken, for a startup such as ours, going public, right, an IPO, even as sexy as it is, all the movies are made about companies that go public. But it's also probably like the biggest mountain to climb, right? It's also probably it involves the most amount of work. What are your comments on exiting on as a public company, like going IPO, versus some of the other options that are out there?
Yeah, I think it's pretty straightforward. From an investment banking point of view, I can tell you that mergers and acquisition, M&A, which is inside of most banks or most large money center banks, or even large trading center banks like Salomon Brothers or Goldman Sachs. For every company you see IPO, there are 9 companies that got bought out that never IPO'd.
Right.
Why? Because what ends up happening is the larger companies gobble them up before they're too expensive under an IPO. They never let the company like ours go to underwriting, which means you have an approachment from like a Morgan Stanley, which is the biggest underwriter out there, that would come to us and say, hey, we'll bring you public, and we'll even pay for it, but we're going to ask for some shares. And of course we would do that. But what's more than likely going to happen, especially within the industry of broker dealers and trading and investment grade software like ours, we're more than likely going to be bought out by an existing company before we even think of it, of going IPO. I feel that's to be good news. So deep gravy is if you go IPO. However, the hurdles are enormous to get there. Much easier to be acquired. Your multiple may not be as good, but it is close. So you IPO, you might make hundreds of times on your money. But if you're able to be merged and bought by someone else, you might just make maybe 5 or 10 or 100 times your money. You never know. Right. I'll give you an example real quick. Robinhood IPO'd, but it ended up IPOing at approximately the value of the company at the time because of all the investments they made prior. So, and by the way, they remain at that same value to this day, even though they IPO'd 3 years ago. So right. We are more an M&A candidate than we are an IPO candidate.
Yeah, sometimes I know it's really sexy and cool to swing for the fences and hit that home run, but sometimes hitting a base hit or a double is
a double and a single scores a run.
Exactly.
In that order. So it's a lot easier to do that than it is to hit a homer.
Yeah.
So it's possible, and we'll see how it goes, but that's our exit plan. Generally, we think we'll be acquired.
Thank you. Yeah, no, absolutely. And that's been the discussion. I think everyone on the internal team is aware that that's been kind of the plan all along. And I'm not even a baseball guy, and I nailed that analogy. So no, just kidding. Now, we do have a nice comment from a fan, CM. Oh, no, don't get bought out.
I saw it.
Yeah, but it's a good thing. It's a good thing, CM. And I think that if you have any other questions, folks, we will have Randy here for just a few more minutes. If you have any last minute questions, submit them in the chat. I'm going to roll a tape for you all and just take a look at this video. Hopefully it gets you excited about what this crowdfunding campaign is all about.
$260,000. That's how much a portfolio with $1 million invested in the S&P 500 could have avoided losing during the last stock market crash of 2022. Elite traders have used artificial intelligence for decades to minimize their losses, while everyday investors are left unprotected. It's a wrong that we are finally making right. We are iFlip, an investing platform that empowers everyday people with the same tools used by professionals.
I spent over 25 years building AI and algorithmic trading systems for the largest banks in the world, like Deutsche Bank and Morgan Stanley. After generating massive returns for the 1%, I realized these tools could help everyday people.
iFlip is an investment platform that uses artificial intelligence to protect and grow wealth over time. We're not a stock trading app like Robinhood, but an intelligent financial co-pilot that helps our customers keep more of what they earn. But most automated investing apps or robo-advisors don't use AI. They use simple algorithms that react to the market after the fact, instead of learning from and anticipating shifts as they happen. iFlip takes a different approach.
Our proprietary AI proactively examines thousands of indicators daily and learns to predict market movement. When risks appear, iFlip shifts portfolios into less volatile assets like cash to shield them from losses. And it does so without our customers ever having to lift a finger. During the COVID crash of 2020, iFlip's artificial intelligence avoided a 22% loss in the S&P 500 SPY by getting out of the market during that 11-day period. And best of all, with a monthly subscription fee that's on par with a streaming service, iFlip costs a fraction of the 1% to 2% fees most investment firms charge. 97% of our customers stay with iFlip once they've signed up.
While other platforms obsess over outperforming the market at all costs, iFlip strikes the perfect balance between protecting our customers from losses during volatile periods while also beating the S&P 500 through capitalizing on trends our AI identifies early. Since launching in 2017, iFlip has outperformed the S&P by a staggering 120%. With a $10,000 investment over 6 years, that would put an extra $8,000 in your pocket.
With the market for automated investing solutions expected to grow at a compounded annual rate of 29% through 2030. We've been perfecting our technology for 6 years to help investors get in and out of the market when it's best for them. Help fund a future where investing is informed, inclusive, and on your own terms, without the ridiculous fees. Invest in iFlip, and together, let's level the financial playing field.
All right, so there you have it. That is our promo video. You can watch that video again on the webpage, on the landing page that we linked in the chat here. Or once again, just scan this QR code to get to the landing page. Check out that video one more time, and you can they'll walk you through how to invest in iFlip for as little as $500. Now, it doesn't look like we have any more questions regarding the Start Engine campaign. Kelly, not as much time to cover the market updates, but it's pretty much what you said was going to happen, just a little bit later than we originally thought. Can you summarize the market update for us in a condensed amount of time?
I'm going to do my very best. So I might run over by a minute or two, everybody.
No problem. Before
Aaron comes to the trivia question, I think everybody who's been watching the market over the last, honestly, just the last 2 weeks have really kind of set the stage. As you can see in front of you, you're looking at a chart of the Dow Jones Industrial Average. We are down on the year right now, folks. So for all the hoopla that the news pundits and the talking heads have been talking about on the surprise of the market, the least important index, I'll give it that, is down on the year. So Bidenomics doesn't seem to be working so well. However, we are currently finally reaching the storm that was anticipated by almost most people on Wall Street this year. And the things that defied the experts, including myself, was just the preponderance and the debt the American consumer was planning to take on over the course of 2023. As we've known, and I pointed out, debt rates on credit cards and everywhere else to continue America's desire to purchase have skyrocketed. Over the last literally 9 months of the year, that's 9 months that we've gone through, the U.S. has put on over $400 billion of extra debt. Sorry, make that $600 billion. I got the number wrong backwards. $600 billion of debt. And that debt has gone everywhere to pay for the items that we like to buy on Amazon or at Walmart, or food we buy at the grocery stores, or even all the way down to car payments. That money has been borrowed unsecured from credit cards, and it has bought everything it could. And that has helped keep company earnings higher and people employed. However, it is coming home to roost. We do kind of have a perfect storm against the markets right now. We see it. We see a UAW strike. We saw a Screen Actors Guild, the writers go on strike. However, that finally is dissipated today. Yay for more content on Netflix. But we also have had high interest rates all year, rising consumer debt. We have a possible shutdown of Congress on Friday. As you can see, the country, between the strikes, shutting down of the government, everybody yelling at each other, both sides of the aisle, this is now home to roost. And that's why the market has gone down. So the Dow being up at one time, all the way up here at 3550, we were up 15%. We are now down on the year as of yesterday. The NASDAQ remains strong. However, as you can see, this is weakening too. Probably likely to extend itself for another 1,000 points to the downside over the end of the year. A bad September. September, we all note, is one of the worst months historically. It is proving so this month. There's only 2 days to get out of it, and we'll see what happens on Thursday and Friday. My opinion, it doesn't really look too good. Finally, we have the S&P. This is the main index that matters. This one is really broke down. We are up on the year, but now instead of being up 20% where we were here, defied all expectations of everybody, we are now up just under 10%. So we've given back half of the year's rally literally today. This, by the way, here, just for reference, is a 200-day moving average. That's very significant in the land of the S&P. Some other things I think are really noteworthy before I try to get through this and get to trivia. I like this. I'm looking at NVIDIA. Remember NVIDIA? Everybody was saying, hey, this, when it got to 500, it had a blowout earnings, 26% above expectations. It opened at 500, closed on its lows. Everybody, Mark Mullaney, everybody's saying it's now going to 650. Well, I guess they didn't think that it might go down 20% before it did that. Because guess what? On last Friday, we were down at 403. I suspect, as good as this stock looks for earnings and its participation in AI, don't be shocked if this stock goes down to 320. Now, that would be a 60% drop. All the expectations for 650 would go away. Now, then it would have to double. That's not going to happen. More than likely this is now either a good buy or stay out and buy it at 320. Me, I'm staying out. I'll try to see if I can pick this up even cheaper. This is how most bulls get trapped. Finally, we're seeing other things breaking down. This is Boeing. Boeing is broke down finally after a year of going nowhere. The banking stocks are back to their lows. Look at this. But they're not back to their lows because of a crisis. They're back to their lows because guess what? If there's going to be an economy that moves into recession, which now does look like it's more probable, the banking stocks are not going to do well. That's a sad day. There was profits here for a lot of people, but they've given up. What has been the bellwether for all of us this year, as you know, is this. Why not just stay in oil? Yes, it's not green, but I see a new high in Exxon today. And most of you guys that are following our platform have these pipeline stocks that we recommended. Well, we advise and opine to have, and they are in our smartfolios, are on new highs. And they were, when we bought these things, folks, they're paying 8% dividends to 9. Now they're only paying 7.5. Not a bad dividend. And that is just one. And then I go to my other favorite, All Plains American, came off of a high this week in the market at 16. We were looking at this at the price range of 11s earlier in the year. I think it goes to 22, and I still think it goes to 22. Again, my opine. Finally, we have to look at this. What is curious is the rally in the stock market occurred last year in 2022, October, when the dollar started to weaken. This here is back in October of 2022. This is when the stock market started to rally. Why? Because the dollar got weaker. This is where the rally occurred. The dollar got weaker. But look what's happened recently. The dollar has become stronger. And of course, if the dollar becomes stronger, that means the stock market is going to get weaker. That is the current relationship between the stock market and the currency markets. And by the way, this is just the dollar index. If you look at it in this is the euro dollar, same thing. It is starting to go down and making new lows. Maybe we go back to these lows. If we do, that's a bad omen, folks. That means the market will go back down another 15 to 20% from here. Same thing is true of the British pound. It came off of its lows in October. Market rallied. Now it's coming off and the market is going down. Again, a little bit lower, I think will start to break the back of the stock market. Ultimately, here's the Japanese yen. The yen, of course, is getting stronger against the dollar, going back to its all-time highs. So this is something where the dollar is still showing its strength against the Japanese yen. And so this is a real key thing to watch. Currencies go the opposite way of the stock market. Finally, the bond market, it has to be looked at. These are the Treasury bond futures. Folks, the secular high of the last 40 years was put in during COVID here. But as you can see, we are making new lows, which means interest rates are making new highs. Higher the interest rate, the more competition there is for U.S. stocks, the stronger the dollar will be, and the weaker the U.S. stock market will be. And we might want to take note that if we go around the world and we were to look at the DAX, this is the German stock market. Well, the German stock market year to date is, guess what? Just up 4%. Look at this. And by the way, it has gone nowhere except for the first 2 weeks of January. It's at the same price as it was in the first 2 weeks of January of this year. Same thing is true of many other things. The first 2 weeks of January was the stock market rally. We are now back into February pricing. The stock market does not look good. This was really what we were looking for to occur literally, I think, 6 months ago. It didn't. Why? The money slashing around in the system really just kept it up. And the American consumer, the one thing you can depend on America consumer to do is buy. Buy, baby, buy. That's what American consumers love to do. And I am no exception, folks. Finally, it doesn't hurt to take a look at oil. 93.84, new highs in the oil market today. Oil market going up. Congress threatening to shut down. Dollar becoming stronger. Interest rates going up. Inflation's likely to go higher. Is this a reason you want to be in the stock market? No. This is a reason to stay in cash. Finally, I'm going to end with this because I'm running on the tight schedule and late. Let's take a look at the machine learning component real quick. I think it deserves a look. And we will take a look at it through this screen coming up. Here it is. I think it's not that one. Event data point. No, hold on, folks. I'm trying to find it. It's not that. Here we go. I'm looking at code if you want that. Folks, I'm having a lot of trouble these days trying to find the simplest thing. It's important. Let me do a window. I think you'll like to see this. I thought it was really fascinating, actually. Is it this one? Sorry, folks. When you need it, you can't find it. And where is it?
Right, Kelly. So just try to do a
window. Do an entire screen and get it that way.
Mm-hmm.
Let's do entire screen. Let's do this one here. Do that. Which screen do you see, everybody? This one here? Yep. Look at this, right, folks.
Can you maximize it? Okay.
Yep, I'm going to maximize it. I'll see if I can change this.
So your text is very small because you have a 4K monitor. So
yep, I know. I'm going to do my best.
Yeah.
So let me see if I can get this to show a little better. Very difficult, I guess. Let me leave it sort of like this. As you can see, this is a chart of the S&P 500. Oh, it's an awful looking chart. I don't think it's rendering well for all of you guys. So I'm sorry on this. What I'm meaning to say is our machine learning, if you were to look closely, I'll have a better picture for next week. What it is showing is that our machine learning has matched my opinion this year. My opinion generally is often different than the machine learning aspect of it, but this year it has shown to be true. And what this chart would show you, and I will have it up for next week and maybe try to offer it in a way that's easy to read. Machine learning has essentially kept us out of much of the market as far as the S&P 500 is concerned. The S&P 500 is the best vehicle there is to participate in the stock market. It's diversified, and if you knew nothing else, you would only buy this one ETF, and you need nothing else. The problem with owning it all the time is the risk with it is deep. It's extremely large. But the value of it is also extremely large. What makes our company different and why we went to Start Engine and why we're looking for new customers when they see conceptually what we do, I think it'll become very obvious that owning the market is a good thing most of the time, but not all of the time. Sort of like Lincoln would say, some of the time you can fool people, but not all of the time. There is always someone you will not fool. The market will fool most people most of the time. That's why you can't be buying long. That's why you need a strategy. Machine learning does seem to work very well on large indices and commodities. And that's why we use it. And we feel it's a big benefit. And I can show and have evidence to show proof of this. This is one of the reasons why Flip is doing what it's doing and putting together portfolios with these concepts in mind. I hope to give you a better graph 2 weeks from now, and I think it'll become very clear and the reasons I hope most of you are behind this company and all of us. Thank you so much. Aaron, trivia.
Thank you for that, Kelly. Thank you. So we went a couple of minutes over today, but I think it was totally worth it because we had a very special announcement that we wanted to share with you all. But let's get right into trivia, shall we? All right. So our trivia question for today is, or the answer is a number. So I am going to give you that hint. If you like to consume our content with as kind of like a podcast passively, now's the time to pause what you're doing, get on your keyboard, get on your phones, and get ready to type in a number. Okay. Now, our trivia question. Give me 1 second. I had to find it. Okay. Our trivia question for tonight is: what is the highest inflation rate the U.S. has ever had? You might think that it's now, but it's not. Okay. What is it? What is the highest inflation rate? We're looking for the actual rate, not the year. Although I will tell you when it was when we share the answer. But what percent is the highest inflation rate that the U.S. has ever had? Now, while you're putting the answers in or Googling it or whatever, what do you win when you get the answer right and you're chosen as our winner? Well, very simple. We have an Amazon gift card in the amount of $25 for the winner. The first person to answer this question correctly in the chat. Now, it's not enough for you to just get the answer right to win the prize. You also need to qualify. What does that mean? You need to be invested in at least one smartfolio in the iFlip app. If you are a customer, that's very self-explanatory. What that means, it could be any of the core strategies, or it could be any of the additive bonus smartfolios as well. Just one smartfolio that you need to be invested in. Just how do you show us that? Well, you just email us at let me see here. You just email the email address that you see on the screen there, mailbag@iflipinvest.com, or you can text us a screenshot of your account or the account number, whatever you prefer. Text it to 480-418-0575 or email it, your choice. We will verify that you're invested in at least one smartfolio, then we will email you your prize winnings. In addition, if you want to double that and turn it into $50, just let us know that we incentivize people to share on their personal socials that they've won $25 on just for showing up and answering a question correctly, learning something, and getting paid as well. So if you're interested in doubling your winnings to $50, then let us know. We can that's an offline conversation. Okay, so let's take a look at our chat here and let's see what the answers are. The correct answer is we have a couple answers.
They're close.
It's close. The correct answer is 23.7. In June of 1920, our inflation rates actually hit 23.7 percent. I mean, that's astronomical, right? We don't even see the stock market go that high on good years, right? And so losing that much buying power to inflation is quite crazy. And so that means our winner for tonight is Amy O'Donnell with an answer of 20%. That's the closest that we had. She was the first one to submit the answer. 20% is close enough. Amy, you are our winner. Once again, just email us or text us your account number or a screenshot of your smartfolio, either to mailbag@iflipinvest.com or the number that you see on your screen. That about does it for our show tonight. Actually, we have a question.
I have one question I want to address.
We do.
Jung Dong.
Yeah, we have a question here. So let's we'll wrap up after we answer this question. So Kelly, can you let me just address this question for you, Kelly, here. My iFlip smartfolio owns only SPY Plus, which is an older version. It appears our red oil in iFlip history performs better than SPY Plus. I'm thinking of possibly switching to red oil. What should be the right considerations? Now, before we answer this, I just want to reiterate that, we can't recommend anything. Right. We can talk about what the SPY Plus has done and why red oil seemingly has outperformed it. But go ahead, Kelly.
Let me just answer it quickly so it can go forward. SPY Plus is actually my favorite portfolio this year. The market was up and SPY Plus was not. Now that the market is retreating, SPY Plus is closer to beating the performance of the combined 2022 and 23 over a 2-year period. If it was me, my opinion is that the oil energy stocks still, believe it or not, have a ways to go. Besides which, they are paying dividends. Owning red oil will pay you a dividend. Also, owning the balanced portfolio would pay you a dividend. So when I invest in smartfolios, if I'm very young, I would recommend SPY Plus because over the long run, SPY Plus will outperform pretty much anything with better volatility. In other words, less volatility than other portfolios that we build. But that being said, is in the current environment and given the next few years, in my opinion, I would own definitely some red oil in here along with SPY Plus. I can't tell you what to do. Everybody can click what they want, but that's my opinion. Dividends will remain strong inside the energy sector, and the energy sector could easily get to $100 a barrel or beyond. It is getting close to that in Brent oil, which is something that the Europeans use, and it's getting close to $100 there, US. So their oil prices obviously are much more expensive, and I see that trend continuing until the energy problem around the world is satisfied. But that's not going to happen at least for a couple of years. So that being said, do as you wish, but it's always good to have some money pushed into different concepts, and oil is one of them.
And Zung, we also have our director of sales in the chat here, and so I greatly appreciate Lee Gearhart's input here. You don't have to just choose between one or the other. So Lee says, Zung, you don't need to only choose one portfolio. If you want, you can split your investment into 2 or more. Now we do have our core strategies because that's kind of like the one size fits all, or there's 3 of them, the 3 size fits all for everybody. But you could absolutely just invest in all of the smart folios if you want, if you're one of those people that has enough capital to spread it around. So
if everybody, by the way, real quick, can see the chart that I just put up. If you can all see that, just look quickly. You can see periods. Look where my mouse is. You can see periods that last a year where you're not invested. Look what happened just recently over the last year here. Similar to after the 2008 financial crisis, where we've gone nowhere. The market retreated. We got out. The market has recovered, but now it's going back down. The idea is over time, this is something that represents the spider portion of the SPY Plus, which is literally 80% of it. If this is not invested, it will go nowhere. But that's fine, and it can go nowhere for years. But at the end of the day, it will beat the S&P 500 just by the nature that tries to sidestep dips, and you're allowed to buy the market a little cheaper when those dips occur. Dip is occurring now. We'll see how far down it goes. But then look for this portfolio, the SPY Plus, to get into the market in a heavy way. So just so you know, that's how AI works. AI is going to anticipate this, I hope, because it's supposed to be smarter than all of us. And we will see if that's the case. But that being said, Lee is right. You can have as many portfolios, smart folios, as you do stocks. So feel free to switch them around. 10,000 to this, 5,000 to that. This portfolio gets 6,000. Whatever you wish, you can do, and that way you can participate in many smart folios all at the same time.
Thanks, Kelly. And we do have Randy joining us again. Randy, we're about wrapping up here. We went a little long today because of the special announcement. Do you have any final closing remarks for everyone here?
You're mute.
Oh, you're muted.
There you go. How about that?
Thanks.
No, the only final remarks, Aaron, is thank you to everybody who has taken part in the investment round and helping us get to the next tier, get to the next level, get the word out to more people, and get iFlip in more people's hands so they can help grow their own wealth. So hopefully you guys come participate with this, and thanks for letting me come on here tonight, Aaron.
Absolutely. Well, that about does it for our show tonight. If you like this kind of content, of course, please click the subscribe button down below. Make sure you turn on the notification bell so you don't miss another live stream. And we will see you on October 11th for the next episode of the AI Circle. Until then, we're gonna sign off and say farewell. Good night, everybody.
Good night, everyone.